Hello guys. So welcome to my YouTube channel. And then today, okay, we're gonna be talking about how to make trade entries. All right. So a lot of my students, okay, traders from my community, they requested that I make a video on how to actually take trade entries because obviously it looks like they are having a problem with it. All right. So I'm making this video to clear you. All right. I'm making this video to make you understand, to help you find out how to trade and make entries. All right. So now, first of all, before you make trade entries, all right, you must understand that your trading entries or the requirements for trading entries is dependent on what kind of strategy or approach you use to the market. All right. What I'm trying to say right here is that if you are trading using ICT, all right, there are some things you will look for specifically. Different from someone who is trading using basic retail price action. All right. I'm going to recap. I said your trade entry model is dependent on your trading strategy or trading approach, in the sense that if possibly you're someone who trades using ICT concept, that's the inner cycle trader concept, then you're going to be looking at something, okay, maybe quite different from someone who trades using basic retail price action. All right. But nevertheless, all right, I'm going to be covering both sides to some extent. All right. Now, the reason why this is so is because these different trading strategies or different trading approach, they have different entry models. All right. They have different things that they want to see in the market. They have different, okay, they have different ways of attacking the market, so to say. All right. Now, like I said before, nevertheless, I'm still going to be covering both sides. Okay. Now, for instance, now you can use candlesticks for entries. That is candlestick patterns, possibly the rejection candlestick, the pin bar, the hammer. Now, someone who will actually use this kind of candlesticks for entry most often is someone who applies the basic retail trading strategy. All right. So someone who applies this basic retail strategy will tend to make use of candlestick patterns, possibly trend lines and sorts and others and other stuffs. Okay. But then somebody who uses the ICT concept now will possibly want to be looking at fair value gaps, which are also in balance. And you also want to be looking at possibly structural breaks. It also looks at liquidity gap and stuff like that. All right. But then, like I said, I'm gonna be covering both sides, okay? Because when I trade, most of the time I apply both entry strategies. All right. Most of the time I bring them together. And then for people who also trade using indicators, though I'm not a fan of so much indicators, but then for people who want to trade using indicators, sometimes they can also use the indicators to confirm or to take entries. All right. So now, depending on your strategy, there are criteria you need before making entries. And this is because you do not want to be trading in the middle of nowhere. All right. So there are some certain rules and should I say criteria that you want to actually have. You want to see that this thing is actually on point before I take trades. All right. Now in trading now, we do not want to trade in the middle of nowhere. We want to try as possible to buy at the best price and sell at the best price also. All right. So we want to buy very low and sell high. That is how we make profit in this game. All right. So I will show you how I make my trade entries, the combination and everything. I just want you to learn from my explanation because I'm actually going to dive into the chart right now. And then I'm going to explain how I take trade entries. All right. Possibly I'm going to use from what was it called, from past entries and all these stuffs. Okay. So now this is on 500 right here. Okay. Now if you don't actually have good structure for the explanation right here, I'm gonna go to a different index. All right. But then let's start from right here. Okay. So this is the H4 time frame, which I most of the time use for my analysis. All right. I use the H4 and H1 most of the time for my analysis, and then I use the H1 and M30 for my entries too. That is when I want to use basic retail price action, okay? But when I want to use ICT, I go down to the 15 minutes where I'm looking for structural breaks and stuff like that. But now, this present setup on the screen, I'm going to be using what's it called? I'm going to be using basic retail price action to explain it. All right. So I want you to see how I analyze, and I want you to see how I ended up taking entry on this particular trade. All right. Now, this is what we have right here. Okay. We have price doing what? Coming from an uptrend. All right. We have price, sorry for that. We have price actually coming from an uptrend. All right. Now, see what we actually see price forming. Okay. we see, okay, we have a low, a high, a lower low. You have this high, a lower low. Now, for someone who uses basic retail price action, he will actually see the possibility of drawing a trend line right here. Let me go down to the H1 so we can actually see this clearly. Now, on the H1, you're going to see the charts more detailed, all right, than it is on the H4 right now. Now, on the H1 right here, we can see that, okay, now we have what we can actually call a temporal downtrend. Okay, so all I needed to do was connect my trend line. All right, I connected the highs, the lower highs. I connected this point, I connected this point, and then this point right here, we had a break of the trend line right here, and then the trend line extended to this point. For those people that have the boom and crash trading course, the boom and crash 𝗥𝗲𝗰 trading strategy, they will understand this setup. They will understand the reason behind this setup because I explained it so much in that particular course. All right. But then what we have on the screen right here, we have basically a break of the trend line, or the break of the channel you might want to see, and the price came back to test the trend line again. Now this is basic retail trading. All right. Now, seeing that price is at this trend line, because we actually saw price sell here and here, and we also have a rejection here, and then price broke off. Okay, and then now we have this next touch here. So what it's actually trying to tell us? It's trying to tell us that we have a higher possibility that price is going to sell from this trend line over here. All right. Now, what other confirmation do we have? We can also say that we actually have this resistance here. This resistance here is actually in play also. So now this has given us confluence. All right. Then if possibly you want to add an indicator, if I actually want to use an indicator, if I must use an indicator, I sometimes apply only the moving average 200. All right. This is one of my trading model or strategy. I don't know what to call it, but then this is how I do it sometimes. All right. Now let's see if it's going to give us some confirmation. All right. Now, amazing. You see that the 200 EMA is also at that point. Okay, also forming resistance there. Let me see if I can make it more bold so you understand what I'm trying to say. And then what I want you to also understand is that we are also working with confluence. We want to see a lot of things telling us that the market will sell from there. That is what we want to see. We want to see a lot of things telling us that, hey, the market is actually going to sell from there and we should take the trade. All right. So that is what we want to see. Okay. So we said the 200 EMA is also there. Now we have our trend line as our first confluence. We have our resistance as our second confluence. We have the 200 EMA as our third confluence. If we need more confluence, I'm going to tell you the next thing you want to do. Add the Fibonacci retracement and see how many percent we've retraced off this move. Okay. So for the Fib retracement, what we're going to do is we're going to take our Fib, we're going to mark it from this high and then draw it down. All right. Because it's actually a downtrend. So we're going to see that, okay, price is around the 0.61 level, which is a sweet level for us to look forward for sales. All right. Because because price has reversed up to the 0.61, which is also regarded as the golden pockets. So we can actually look for sales from that price level. Okay. This is basic retail price action trading. All right. Now, once we actually seen this, the next thing we want to see is, okay, when do we enter the market? We've seen that, okay, there's a very high probability that price is actually going to sell from this zone over here. But then when do I enter? Do I just jump into the market? No. Now, at this point or at this bridge is where candlestick patterns come in play. Now, usually I'll go down to my M30. Remember, I told you I use my M30 and my H1 for what? For entries. So I'm going to go down to my M30 and see if I'm actually going to see an entry opportunity there on my M30. All right. So this is it right here. Okay. Now on the M30, I've actually seen an entry already. Okay. Now this rejection candlestick over here, I want to zoom in real well so you can see it. This black rejection candlestick is actually going to be my entry. This rejection candlestick over here. Exactly. Okay, so this rejection candlestick here is actually my sell entry. This is just what I look for when I'm using basic retail price action. I want to see lots of confluence, solid confluence, telling me to actually go into the market, and then I want to see my candlestick giving me sweet entry. All right, so this is one of the ways I take my entries. I really hope you've learned from this because I've really shared a lot. All right. I've shared a lot. Now, one thing I also consider is what? The trend. I also consider the trend. Now, if you look from the bigger picture, price was what? On an overall uptrend. Overall uptrend. But then if you go down to the M15, I would say, at this particular price region, okay, that we just analyzed now, you notice that price went on what? A temporal downtrend. So it means you should not hold the trade for too long, because the downtrend is just what? A temporal one. Chart load. Come on. Let me go to M30. All right. If you go there, you're gonna see that okay, this is actually a temporal downtrend, because we still have what? We still have the high. We still have a high, a low, a lower high, a lower low. Okay, this is a lower high here. We have a lower low here, another high, a low, a high, a lower low here, a high, and then from here the uptrend continues. But then if you notice, from here we have what? A partial downtrend, which is good enough for us to scalp for some sell. All right, now to complete the trade entry and stuffs, after I have actually spotted my my candlestick to confirm my entry here, what I'm going to do is I'm going to take a short position. Immediately the candlestick close, I'm going to take a short position, put my stop loss few pips above previous high. All right, and then I'm going to look to target what? Lows of my left price action. So I'm going to look to get this low over here, all right, possibly as my take profit 1, and then I can also target this as my take profit 2. All right, but then as you actually can see, price hit take profit 1, went a little below it, and then reversed from there. All right, so at this point you should have taken partial profit and locked your profit, so the trade will have still ended you in good profit, and that is how you roll. As simple as that is. All right, now that is a model on, or that is an entry explanation on using basic retail price action. So a couple of things I actually mentioned was that I want to see enough confluence. Okay, I want to see many things telling me that the market is actually going to buy or sell. And those things I actually want to see telling me those stuffs is what I want to see. What's it called? I want to see the trend. Okay, I want to see the trend being in my favor. So I want to actually sell in the direction of the trend. Okay, it means I want to trade in the direction of that trend at that time. So if the market is on a downtrend, I want to look for sales, and if it's on an uptrend, I want to look for buy. No going against the trend. All right, so trade in the direction of the trend. The trend is your friend. All right, now the other things I also mentioned was I want to see a lot of confluences. The confluence could be the trend, could be trend lines. If you're using basic retail price action trading, it could be trends, it could be trend lines, it could be support and resistance level, and you can also use your 200 EMA, and then finally you can use your candlestick rejections for trade entries. All right, I really hope that helped. Now the next model I'm actually going to be talking about, I'm going to be talking about the ICT. Okay, because sometimes I tend to use the ICT. Okay, so I actually saw something on Crash 500. All right, it's actually a trade I analyzed yesterday, so I'm just going to explain it. For people who actually view my WhatsApp status, I uploaded the screenshot on my WhatsApp, and then now you're lucky enough to actually find the explanation on this YouTube, all right, on this video. All right, so if you're not actually viewing my WhatsApp status, my number is going to be in the description box below. You should message me after the video, or you can message me now so I can save your contact, you save mine, and then you also watch my status and also gain value from it. All right, so now straight up to this. Now, every entry model here is strictly based on what? ICT concept, based on market structures, imbalance, and all those things, liquidity graphs, and all those things. All right, so let's start from our H4. Let's see what we are looking for. It's even actually going to start from the daily. Sorry, let's start from the daily and see what we actually dealing with right here. All right, now this is really an interesting part of trading. Okay, it's not boring. Trading is not boring. Trading is interesting. All right, so, and this is an interesting part of trading. This is something I want to actually share with you guys that you're actually going to gain value from. All right, so now this is the daily time frame. All right, now if you do not have an idea about ICT, I do not want to say this might be quite confusing for you, but then just try your best to understand. Okay, I'm going to try my best to explain as much as I can. All right, now when we come to ICT, we want to trade like the banks. All right, we want to trade like the big boys in the market. All right, now looking at our daily time frame, okay, we can actually spot equal highs, which is high. This high is actually the first one here. This high here is the first high. all right? And then this high here is the second high, all right? So now, and in ICT, whenever we see equal highs, it rings a bell in our head. It wants to tell us that, hey, liquidity is lying above those highs. As simple as that is. Whenever we see equal highs, equal lows, we know that, hey, liquidity is lying around those regions, okay? Liquidity is lying around those regions. A lot of others are above those regions, and then price will want to go and tap liquidity or grab liquidity, all right? So now we have this equal high here, all right? We have this highs here. Now it means what? Liquidity, lots of money is above this high. It means price will most likely want to go and grab those liquidity. When we talk about liquidity, we talk about stop losses, all right? It means a lot of people are selling. A lot of people are selling. A lot of people will have sold from this resistance here, okay? A lot of people will have sold. And then when you sell and put your stop loss, okay? For instance, let me say your stop loss is here normally, okay? And then you want to sell when price gets to this resistance. Now, your stop loss is money. If price hits your stop loss, you've lost money to the market, all right? So now, lots of stop losses are above this high, a lot of them. So it means what? We have lots of money above these highs, all right? And then that money is what we refer to as liquidity. So the market is not your friend. So the market want to take your money. So when you put your stop losses above here, the market will try so much to go and hit your stop loss and then possibly come back in that direction. So that's what we call liquidity grab. When the market stretches out to grab hit your stop losses, take your money, and then that is what we call liquidity grabs. All right. So I told you in ICT, when we actually see equal highs, it rings a bell in our head, and that bell is what? The bell of what? Liquidity grabs. All right. So I saw this and I highlighted this already, okay? So it means, okay, price will want to go up and grab that liquidity, okay? So when I actually saw price grabbed that liquidity over here, price broke the structure and went up. I know that, okay, now the liquidity has been taken, and it's very possible we are going to see what? A sell from there, okay? So what I did was I went down to my M15 straight up from H4 from daily to M15, all right? From daily to M15. So now seeing this, first of all, the price action was around here. First of all. So now in ICT now, we consider market structure highly, all right? We really pay attention to market structure. Want to see breaks of lows, breaks of highs, and stuff like that, all right? So on this time frame, which is the M15 time frame, okay, price broke this high, nice one, normal market structure move, all right, for an uptrend. I have the break of this high. Now we also had the break of this high, which was also what? A grab of liquidity also, okay? So price also broke this high and then went down to break this low. Now, breaking this low is not a good sign for an uptrend, okay? If price actually breaks the low, then it means we will go possibly on a downtrend or a partial downtrend, all right? So price broke this low, and I see that price broke this low. The next thing we are looking for is what? Sells. As simple as that is, okay? So once we have actually spotted the break of that low, the next thing we want to actually find is what we call an imbalance. Now, an imbalance is when we have a gap in price, okay? When we have a gap in price. When the previous candle before the present candle and then the next one after the present candle did not overlap price, okay? What I'm trying to say is that it left space in price. Let me give you an instant. I really hope you get this now. I'm trying to give you an example, okay? Let me look for something really good to explain with. Something really good and clear. Give me a minute. I'm trying to see an imbalance that's not a field so I can explain, all right? Just give me a minute. All right. Now this is actually interesting, all right? This is really interesting, okay? Now when we talk about imbalance, I told you that we are looking at where we do not have an overlap in price, okay? Where there have been no overlap in price. Now, this is actually an imbalance, okay? This is actually an imbalance. Take a look at this. Now, this is an imbalance because we have this vacancy here. From here, actually, we have this vacancy in between these candlesticks. Okay, price did not come back to actually fill this fill this imbalance. Now, assuming this week, possibly came down, and then from here it then started going up. It means that, okay, the imbalance was filled. There was no imbalance there. All right. But now we have this gap. We have this fair value gap. It's actually called a fair value gap, and FVG. That is what it's called. All right. So we have this fair value gap, and it's also referred to as an imbalance. Okay, let me go to a higher time frame because we're actually going to see clearer imbalances there. Okay. Now, this is the H1 time frame. Okay, this is the H1 time frame. I can actually see lots of imbalance filled right here. Okay, amazing. Now, this is an imbalance that was not filled. Okay, I want to just show you something right here. Now, this is an imbalance that did not get filled. Now, this space right here, guys, this space right here is what we call an imbalance. So I believe you understand that now. We did not have an overlap in price. Price left this space going all through, all right? So I believe you understand what we mean by an imbalance right now, okay? So let's go back to our chart. Let's go back to our M15 and keep on explaining from there, all right? All right, so like I said, we then had the break of this low over here. We had the break of this low over here, and then the next thing we actually want to look for, next thing I actually looked for was what? An imbalance in price. And then if you notice, there was an imbalance in price over here, all right? Check. This was the imbalance in price. As clear as that is, all right? That was before price actually filled it, okay? So from here, we had the imbalance in price. So it means, okay, we actually want to see price fill it. Now, when we see imbalance, we have actually seen our entry, all right? Provided that the other procedures have been met, the other things we looked for earlier was gotten. So when we see imbalance, we've seen our entry. So all I actually did was what? Take my entry at the beginning of this imbalance, all right? At here, and then I put my stop loss above previous high, above this previous high over here. I put my stop loss above this high over here, all right? And then good to go. And then you can see what price actually did. Now for my take profit, all I did was to target the low to the left, all right? Because I actually want to also see price grab liquidity from the low, all right? So this is it. So I put my stop loss a little, my take profit a little bit below the low, and then voila, TP hit, all right? And then that is how I actually got entry in this ICT entry model, all right? Now, following that, this is actually what happened on the 15-minute time frame. Now, if you follow from H1, you actually see something very, very interesting also, all right? Now, from the H1, we have what? The break of this low. We have an order block up above here, all right? Now, if you check from the H1 order block, price most of the time will come back to test the order block, and beyond that also, we also have another equal highs. These are the equal highs over here. This is one high over here, and then we also have what? Another high over here, all right? Very, very interesting, all right? So now, price also will need to go up and grab this liquidity. Now, if price goes up to grab this liquidity, we are still looking for what? Another imbalance to sell from, all right? Now, price, as expected, went up to grab this liquidity on our left-hand side above the equal highs. So price went up, grab the liquidity. Now, we have seen price at this zone, all right? At this zone. Now, if we actually want to look for the imbalance around here, this is the imbalance, okay? This is the imbalance. This is the imbalance over here. Actually, this was the point actually marked on the screenshot on the WhatsApp status, all right? So this is the imbalance over here, okay? Now, price is at this point. Now, we are not just going to sell, okay? This is the H1. It means if we go down to the smaller time frame, we are going to see more imbalances on the smaller time frame. So we are going to dive into the 15-minute time frame to minimize and give us a more precise and specific entry, most importantly. So at that H1 zone, price is at the imbalance. We're still going to break down the structure. We're still going to refine it. That's what we call it in ICT, okay? We're going to refine it to get something more specific, all right? So we still had what? Price broke this high over here, broke this low. Now, seeing that price had broken this low, the next thing we are looking for is what? An imbalance again. Now, this is the imbalance over here, all right? You can see from here to here, we have the imbalance, all right? Now, this is the imbalance. So just as we did before, we are still going to take our entries, put it at the beginning of the imbalance. Our stop loss will be a little bit above this high, all right? And then our take profit will be below the previous low. Now, this was actually the previous low, all right? Then we're going to just put our stop loss a little bit below, our take profit, I mean, a little bit below the low, and you can see how price moved. Now, ICT, so far, right now is one of the best, I would say, trading approaches to the market. All right. So you can actually do yourself good by learning ICT. It's actually going to help your trading, because this kind of trading is also applies to currency and everything. All right. I have a chart on what's it called, on gold. Okay, but I don't want to show it now because this is strictly for teaching only. Okay, so in ICT, you want to look for imbalance, you want to break down structure, you want to refine it, all right? But then ICT will be actually kind of complicating if you have not come down to study it step by step, all right? But possibly, maybe for now, you can stick with the basic price action like I explained earlier. And then if you want to step up your game, you can still go ahead to learn ICT, all right? So I really hope this video helped. And then have an amazing trading session. You can subscribe to this YouTube channel for more. And also join our Telegram channel for Telegram chart updates. Okay, and I analyze the boom and crash market every day, and then I upload it on the Telegram channel. It can help you with your trading decisions and everything. All right, it's also for learning purposes. Okay, so have an amazing time. Follow me on WhatsApp. So follow me across all social media handles. Follow 𝗕𝗿𝗄𝗏, and then I'll see you on the next video. It's King and I'm signing out.